Iraq has taken a big step towards exploiting more of its oil and gas reserves. It's inviting foreign energy firms to develop its offshore oil fields. Iraq gets about 90% of its income from the sale of oil and gas. But could its plans add even more oil to an already oversupplied market? Laila Humairah reports.
We invite all international companies to participate, invest and compete to explore and develop 9 new blocks at the border areas.
Iraq is hoping to charm its way into boosting its oil output capacity through foreign money. Bids are open for international companies interested in exploring and building 9 blocks of oil and gas reserves. 5 of the projects up for grabs are located in eastern Iraq, close to the Iran border. 3 sites are planned near the border with Kuwait. And 1 offshore plant will be located in Iraq's territorial waters in the Persian Gulf. The country says these areas have a lot of potential as they've been neglected during decades of conflict with its neighbors. Iraq is OPEC's second largest oil producer, churning around 4.4 million barrels per day. Those levels are in line with an OPEC agreement to curb output and prevent crude prices from falling. The deal, reached in January this year, has OPEC and its allies promising to cut oil production by 1.8 million barrels per day. Since then, oil prices have risen and hit a new 2-year high last week. But in March, Iraq's oil minister said he's expecting the country's output to reach 5 million barrels per day by the end of this year. It's been facing pressure from OPEC members to cut deeper than its agreed share. As the bloc prepares to meet in Vienna on Thursday, it will look to extend the output cut deal. But with 9 unexplored oil fields promising billions of barrels of oil, what may be good for Iraq's economy may not be welcome news for the global oil glut. Laila Humairah, TRT World.
Dr. Ellen Wald is an energy expert, a scholar at the Arabia Foundation and author of the upcoming book Saudi Inc. And she joins us from Dhahran in Saudi Arabia. Great to have you as always, Ellen. Iraq's decision, how is it going to affect the announcement, well, hopefully the announcement on Thursday as to whether OPEC's going to extend its production cuts beyond March?
So I don't think they're going to affect the meeting all that much because the new bids are really not going to even take place until June, and so no production would be scheduled to start until after the cuts are due to expire.
OK, so another factor likely to overshadow possibly that meeting is the heightened tensions between Saudi Arabia and Iran. How is this going to affect that meeting, do you think?
So tensions between the two countries are high. I don't see them impacting this OPEC meeting, mostly because OPEC is a much more professional organization than it used to be, and also because Iran is very happy with the exemption that it got. It thinks it got a fair deal, and basically they're going to extend that exemption for Iran. Some tensions could be likely between Qatar and Saudi Arabia, though.
Right, OK. We are almost out of time, Ellen, but just looking at the supply and demand fundamentals, where do you see prices right now? Do you think they're fairly valued, oil prices I'm talking about, or if not, where should they be?
I think that they are a little bit high at this time, considering the fundamentals, particularly WTI as a result of the Keystone Pipeline closures. We saw oil dropping almost 2% in trading today, so we may see a correction before the meeting gets underway. OK, Dr. Ellen Wald, energy expert, thank you very much indeed.